Mehraboon, I'm looking at PSU bank stocks which are all selling off hard. Canara Bank, Bank of India, UCO Bank is down sharply. Actually, Bank of India is down 6%. Anything specific here in terms of worries or just a pullback? What would you do?
I think exactly a year ago I was very bullish on PSU banks and I was negative on IT. Now I think the trade which took place, I think exceeded my own expectations if you ask me. And I think less than a month ago when I was asked a specific question on PSU banks, I said there's still a great space to be in, but the stocks could correct 10, 15, 20% from the present levels. I think some of them are corrected a little bit more, especially the name which you mentioned. And if you ask me, is it a buying opportunity? I would say the answer is a certain yes. The point is, NIMs somewhere could peak out. Have they peaked out? Maybe one more quarter. But the point is that the books are relatively very, very clean as compared to what they were, say, 1 or 2 years ago. Will the books become dirty again? Well, let's hope not, but it will take its own time. So I think the positive story as far as PSU banks is very much there, and the stocks, the pullback which has happened, and I'm using the word pullback which you prompted me on, Prashant. I would say that pullback is a lovely opportunity for people to go and buy into at least 2 or 3 PSU banks. I personally own 4 of them, so disclosures are very clear over here that I'm owning some of them, and I remain positive on this particular space, especially after the pullbacks with the stocks are seen.
Sharp pullback. The Nifty PSU banking index is now down nearly 20% from its December high. So that's on the index level, and individual names like Bank of India, UCO Bank are down 30-35% from the December highs. But the other pocket of interest today is the entire power sector. It's buzzing in trade after the government directs power units importing coal to operate at full capacity in the peak summer months to make sure we don't have any power shortages. Vivek joins in to tell us the impact and more details. Vivek.
Absolutely right. So, what the Power Ministry has done is they've gone in and invoked Section 11 of the Electricity Act, which basically allows, coal importing power stations to go ahead and import coal, and they would get a complete cost pass-through. And this is seen as a positive as far as the entire power utility space is concerned. So now all of the imported coal-based power plants will now operate and generate power at full capacity. Remember, a similar move was undertaken from May to December of 2022, and 2 companies that saw a significant positive impact was Tata Power as well as Adani Power, given the fact that their Mundra power plant operations were basically dependent on imported coal. Citi has actually gone ahead and written on this particular development. What they're saying is that this particular move will benefit the imported coal-based plants. They also believe that currently they are unable to do a complete full fuel cost pass-through, and which is why they are operating at very low capacity. Specifically, they mentioned Tata Power's Mundra UMPP, saying that this particular plant will benefit for the period where Section 11 continues to remain in force. Further, what analysts are saying is that when you're talking about the PLF of NTPC, last year, same time around, from 70%, it actually improved to 80+%. So they believe positive for the entire space, and merchant power prices will also go higher, which makes it possible even for the exchange, that is IEX.
And that explains why these stocks are excited, the few stocks that are excited in today's session. Thanks, Vivek, for explaining the details there to us. Mehraboon, good afternoon. Great to be chatting with you as always. Not sure if you look at any of these, Tata Power, Adani. It's very clear the government says run at full steam. And I think there's also the details where if there's any differential because of higher prices of imported coal, I think there's going to be a mechanism to deal with that as well. So your thoughts?
Well, I would like to, if you allow me, Surbi, I would like to add a couple of sentences to what Rima mentioned, and even Prashant asked me about PSU banks. Just I will take less than half a minute. I think the correction which we have seen of 7 to 10% in PSU bank or PSU bank index, which Rima reiterated twice, I would like to state that we also need to look into the fact that look at the way they had gone up. I think I challenge any PMS firm or possibly any HNI to have turned out with positive returns for the entire calendar 2022 if he was not invested in PSU bank stocks or maybe the Adani stocks, which had a stellar performance in 2022. Without this too, I think your returns could have been negative. So in the light of what PSU bank stocks did to portfolios, I think a 15-20% correction from the peak levels is nothing to worry about. So that finishes my answer. Coming back to your question on the power sector, I think power, railways, capital goods are sectors which one expected them to do well. Also, one knew that the budget would come up with a lot of positives for them, and that is exactly what is happening. And this morning news which you all carried about the import of coal and other things, I think, and facility to sell the excess power on the exchange, I think is certainly very much positive. The question is, do you go and buy into the frontline power generating companies, or do you go into companies which are ancillary to the power sector? I would prefer the latter, if you ask me. So I would prefer names in the transformer sector like a CG Power, which is extremely expensive in terms of valuation, but belongs to the Borukappa group, which undoubtedly is rated as one of the best groups in the country. I would like to go with something like a Bharat Bijli over here. I think the company in transformers with very clean balance sheet, with a substantial holding of Siemens. Then there are names like Siemens, there are names like NTPC also, which look very attractive. So this is a space which I think should remain in focus. Let's not forget, we are 1 year away from the elections. The government has got a lot of things to do, and they have planned a lot of things, and I'm quite sure they will go ahead with it. I think this is one sector we should continue to do well. So that is my comment on the entire sector as such.
Okay, all right. Some of these industrial-related stocks and PSU banks, Mehraboon likes them. Thanks for that, Mehraboon. Stay with us. For the time being, the markets actually have come off the low point of the day. So just keep that in mind. We're keeping an eye out on Putin's speech. But for the time being, in fact, from the start of the show, at least we have bounced closer around 30 points or thereabouts. Slip into a short break. On the other side, we'll discuss top stocks and portfolio bets with our alpha manager, Amit Gupta of ICICI Securities, will be joining in.
Welcome back. Another stock you should keep on your radar today is Wipro. It's down nearly 1%. All of you would have read in the papers today that Wipro has announced that the freshers who will be joining Wipro now are going to be given sharply lower salaries. Earlier, the freshers who had committed to joining Wipro were promised salaries per annum of 6.5 lakh. Now they're saying, join us, but you have to join us at 3.5 lakh. If you don't want to join, then don't join. So this is a sharp 50% cut, right? And everyone's wondering what exactly happened, because this is very bad, public relations, PR. Optically, it doesn't look good, because how much are you going to save by cutting down on the fresher salary? Anyway, the salaries are not very high to begin with. A bulk of the hiring perhaps has already taken place at the beginning of the year. So how much are you going to save, right? And it just goes to underscore the demand and the supply side situation that IT companies are in. Remember, IT companies make plans to hire in advance. The offer letter is given to you well in advance. At that time, you're anticipating a certain demand environment. The demand environment has changed in the last 6 months, and the supply side situation has also changed drastically. Now remember, Wipro per se, their growth is not very high. In fact, in Q4, they're guiding for the possibility of negative growth. Their guidance for Q4 is minus 0.6 to 1% growth, right? So best cases, they're going to see flat growth, right? So if you are seeing flat growth, then why even pay that balance, why even pay, an extra bit of salary to the freshers? That's what analysts are saying. Also, their margin performance has been lesser compared to peers. There you have it. Wipro's margins are lower than peers. So according to analysts, that at a time when growth is scarce, growth is moderating, the company is wanting to focus on their margins, which is why they are cutting costs wherever it is possible. On the flip side, that's on the demand side. On the flip side, attrition has been moderating for the company. Their utilization level is the lowest in the last 12 quarters. The company said we've hired a lot in the last couple of quarters. Our employee headcount has gone up by 40-45% in the last 10 quarters. We've increased in size, and now we want to utilize the existing bench because that is currently underutilized. So it's a combination of both those factors, but just purely optically, it doesn't look good when any company comes out and goes back on its promise of the salaries that they had promised to the freshers, because ultimately, how much can you save? Mehraboon, thoughts on these kind of headlines? Would you be worried that perhaps this is a sign that demand is slowing down much more than what the street was earlier anticipating?
Well, I think the clear conviction of mine last year was sell IT by PSU banks. And I think what PSU banks did, IT did the opposite. If you look at the 52-week highs of most of the frontline stocks and even the mid-cap IT stocks, you will understand what I'm saying. They're sharply lower than what they are, coming to Wipro specific. I think if you look at the numbers for quarterly 3 and the management commentary, if you put them together, there is a clear-cut confession of the fact that there is a softness in demand as discretionary spends are seeing a major slowdown. The deal wins were at a record level in quarterly 3, but if you look at these deals which they had won, most of them were large deals. And those large deals, I think the ramp up which took its own time for them to come. It was expected to come maybe at least 1 or 2 quarters before that. It took its own time. The company has rationalized subcontracting of cost. That means they can hire as and when required when demand picks up. That is what indirectly they are trying to say. And this morning's incident, what has happened. So I would say that the only thing in favor, I think, of Wipro right now would be the stock price. The stock is trading near its 52-week low and much, much, much lower than its 52-week high. While the margins are lower than its peers, the point is people in defense of Wipro will say the stock is also quoting at a valuation of at least 15-20% cheaper than what its peers are being quoting at. But is that reason enough to go and buy into it? My answer would be a clear-cut no. First of all, the demand outlook is not very good. And Wipro, let's be honest, over the last 3, 4, 5, 6, 7, 8 quarters has normally reported numbers which have failed to beat muted expectations. So while the stock price could be the only thing which I would say is in defense of Wipro right now, it's going at around 16, 17 times FY24 earnings, a discount of 15 to 20% in its peers. But I would still say that there is no reason why one should be in a hurry to go and to buy into Wipro stock. People may say it's cheaper than Infosys or TCS in valuation terms, but honestly, there are not any triggers which one can see in the near future for one to be in a hurry to go and buy into Wipro. So certainly a clear ignore from my side.
Okay, Mehraboon, it's a pleasure as always. Thank you very much for your time and good speaking with you.
Thanks,
Thanks indeed.
Thanks.
Thank you. Well, 40 points lower on the Nifty is what we have. Now we're at the low point of the day. So 17,800 is the low. We're at about 17,804. And I think you got a similar kind of picture, not quite on the Bank Nifty. The low on the Bank Nifty is 40,508. We are at about 40,619 or so. The Nifty, yes, at the day is low. The Bank Nifty, not quite. Our Alpha Manager of the day is with us. Amit Gupta is Vice President and Fund Manager at ICICI Securities. Amit, it's always a pleasure having you with us. Good speaking with you. So tell us, Amit, where are markets headed? First of all, directionally, do you have a firm view that this will be a risk